Hi, this is Kim Watson. Welcome to a video I was inspired to make because it was a subject that was covered in our day trading room recently, and it's regarding reading price action. The thing is with traders, and I'm just as liable to do it, is to have lots of indicators sitting on your charts, whether it be bands of any sorts, lots of moving averages, pivots. I love pivots, and etc, and with lots of baseline indicators as well. And of course it can become a bit noisy for some. Now of course there are good places for all these indicators, but what a lot of traders in this day and age seem to have missed out on possibly was the event of actually learning to read pure what the price is doing, and it's sort of overlooked, and it's not always easy. And I thought I would do a quick section here, a quickish section on this, just on reading the price. I may actually expand on this in future videos, but it's a starter for 10 then. And I'm going to start from the chart back here. Now obviously it's easy done retrospectively, but I just really want to show the theory. I say the theory, but the principles rather than the theory, because the the principles work pretty well. And it's regarding looking at what price is actually doing as opposed to what something else is telling you. Remember that most indicators are delayed function. Even pivots, where they give you a future targets and future levels for the coming day, week or month, they are still taken from historic price action. So bear in mind that everything we work with in terms of indicators, the only thing that isn't delayed is the current price and that's spot on at that time. So with that in mind, let's have a look at how we can read a market in terms of price action. And I'm going to I've just pressed on that button a little bit too early. Let me just unpress that button. I'm going to just take a step back here. There we go. So we're going to start from this point here and look at what's going on in terms. Now this is a daily price, a daily chart at the moment. It doesn't matter whether it's daily, 4 hourly, 60 minute, 5 minute, 2 minute, 1 minute, whatever you like to be. The principles stay the same. What's happening in this market? So the price action at this stage is obviously looking like it's in a bit of a downward move there, but suddenly puts in a move of a few upward candles, pulls back and pushes up again. At this point here, when it's broken that previous high there, it's given us what I'd refer to, I refer to, but it's a higher low, and that in itself really suggests that the market is pushing up or has potential to push up further. Now as it happens, we can see it hasn't and it eventually rolls over. Now as it's rolling over, it breaks this level here. Now what that does confirm, and clearly confirms at that point, is that we've got from this high here to this high here, is we've got a lower high, and it's actually only confirmed as a lower high when the previous low is taken out there. So here we pushed back up and it's pulled off, and when it's broken that low there, this is then running into what would be deemed as a more of a bearish market. So it's broken what was a potential trend at that point. Now this may have been setting up for a little while. I'm not going to go any further backwards, just going to look forwards. Now as the price action comes down here, it's very easy retrospectively to see what's actually happening here, but it's got itself into a bit of a trend. Now this is a daily price action, so that doesn't mean to say we can't be amongst all of this trading a little bit counter trend at times. There's opportunities in the market to do so, or just being patient and waiting for predominant sell opportunities. Now some days when you see these green bars, it wouldn't have happened too much, most likely, or they would have failed. But predominantly in this downward trend, there's more red bars than there are green bars. So if you've been looking to sell in this downward market, in this downward trend, you'd have probably done okay. Now I know you're going to point to this area over here. We'll come to that in a minute. Important thing is just carry on learning this theory for a minute of the lower highs, lower lows, or higher lows and higher highs. But from this stage at this market at the moment is sitting, as I say, it's broken down here. It looks bearish. The the bars as they do come down, and it's confirmed as it sort of moves down, price moves down, comes back up, a little bit of retracement, maybe profit taking, whatever it may be, and then heads south again. Now this, once we see the price break that low there, is another lower high. So we've got two lower highs, so the market is confirming the downward trend. So at this level here, it just continues off south. For whatever reason it stopped here, I'm not going to go into, but it's still bearish, and in fact it stays still bearish until it starts giving me a signal otherwise. Now it's pushed up at this point here. Now what you can do, and what would make complete logic, is to take all this ink off here and pop a trend line in at this stage. When it's done this, when it's starting to move down and starting to get a little bit of a kickback, we want to see how this trend is facing out. Technically, you could say, well, it's breaking the trend line now, and the trend is done and dusted. But realistically, the markets don't always work that. So I'm looking for signs aside of just a little bit of maybe a bit of profit taking that's gone a little bit too far. You don't know at this stage. It may be a bit of profit taking. Looking at it realistically, it had a strong move down there. You'd expect possibly a bit more of a bounce. But whatever you expect, it's started moving up, and it's soon sort of putting it. It's pulled back on this, but it's only a single bar, so really it's not much to read from there. And it's pushed up. So has it really put a higher low in? Possibly on that bar there. If you're looking at 4-hourly bars, that would certainly be a higher low. But it's really, there's barely any retracement. If we had a few candles in between, a decent, like this one here, pushed up and then pulled back, that's a bit more significant. This is a less significant move here. So at this point it has pushed up, but it's still effectively a bearish market at this point. So yes, you can see there's green bars and the price is going up, but it's still potentially a bearish market. It then starts rolling back off again, pitches, and probably on a news-based day here, we probably had some news coming out through there. It sold off quite strongly. Now on that day when it's breaking the lows here and starting to run down, it's probably given us a few signals, but it hasn't put in at this stage a lower high or confirmed lower high until it's broken this low here, and it actually only does that marginally, I think, way back here. In fact, I don't even think it managed to do it at that point. It didn't really close below it. It didn't. I say close, but it didn't really pitch below. So it gave some indecisive price action here. What it did here, though, is pull back, then put a low in, and then eventually broke the top of that, which gave us a higher low. So it's starting to give us more of a bullish signal at this point. So at this point here, see the low here was higher than this low, and as it pitched beyond that prior high there, it's given us a higher low here. Gave us a higher low, but it's then tripped over again, pitched back, pushed up, didn't break the top there. So well, it's become indecisive, and this is a bit of an indecisive market. It's not so easy to read because all you're seeing is a mixture of price action. It's pitched down there, broken up, there's no confirmation of highs or lows or whatever else. Then we've pitched down here, and by doing so we broke that low there. So this become a lower high again. Lower highs suggest weakness, so it's put a lower high in. It's then pitched back up, not completely taken out that high, looks soft, very bitty, but then pitched up again and then broken down again here. Again, this high was marginally lower than these previous ones, so arguably is a lower high again in there, which is weakness. So during these periods, you can see when they're materializing, it's more difficult to read, but we may be looking to be trading with lower highs coming through. We may be looking to trade to the downside more so on that, be a bit more biased. But whatever, it's choppy. It may be better when we're seeing this indecisive price action that started really back here somewhere. when that price action starts, if there's other markets to be looking at, look at the other markets to be trading, the other currencies. If they're all doing this, well, then it's patience. Look at the time, July to August, running into the sort of early holiday season. August can be, it's not unusual to see this sort of price action happen during then. But anyway, just carrying on to read the price. We broke that low, broke that previous low here, pushed down. It pitched up, broke here. So we've got another lower high here, confirmed. Sorry, I'll put the L before it. And we've also confirmed a lower low as it pushes through the bottom there. So we're starting to give me lower highs, lower lows. It's bearish for now. Bearish, bearish, and okay, it suddenly again puts a reversal in here. So the market's bearish. At this point here, we're still bearish, and you can put trend lines across all different ways here. In fact, I'll pop a couple of different alternatives. As this market would have been expanding, you'd have been looking at probably the market price over here, then eventually moving it to here. Well, I probably did, and then to here, and this would be the most logical last part of that movement to be pushing it in. We've got to retrace it. We've got a retracement. It started changing direction here. It's green. It's green. It's okay. It's showing a sign of early bullishness, and it pulls back. Just a single bar pullback is a little bit like way back here when we got that sort of single bar pullback, and then it pushed. And it may be that at these levels, the upward momentum at that stage is just too strong to sell off any further. People just want to buy, and you've just got to accept. They might be a little bit shallow on the first time. Other times they can be bigger and more drawn out. But it has again broken, maybe confirmed, as I say, on the shorter time frames, come down to the 4-hourly time frame, and that would be a much clearer position. And off it's pitched again. But then rolled, and okay, looking at price action, it's just gone back into some historical resistance levels. As if you draw across the tops of the bodies and the tip, there was a area of obvious support and resistance kicking in there. Okay, price is sold off again, pitched down, sold off again. At this point here, when it clicked on this low here, that did actually confirm a lower high, which would suggest a weakness, and then immediately it pushes back and starts running back up. Only as it breaks that high here, as we've got a proper confirmed higher low come through as it pitches there, and once it's pitched up here, well, it's then pitched a higher high, high low, high high, kicking in, and it's looking all nice and bullish again. At this stage, of course, we can drop a trend line going across here, and it looks all hunky-dory for the upside, of course, doesn't it? Well, for a while. What it's done on the short time frames is similar to what it's done back here on the short time frames here. It's shown it, well, certainly within the few days there, it's shown some weakness. It started rolling. You might have seen something on the lower time frames which confirmed that and gave you an opportunity, but if you're a more conservative trader, you may just be waiting for a bit more movement. It is more here about reading price. It's sold off, pulled back up, and as it breaks this level here, it's confirmed the lower high, and again it's into a bearish zone as it is now. Quite simple reading of the market. It's, to be sure, reading the market, it's not always clear in terms of these higher lows, higher highs, and when it's not clear, it's not clear for a reason. It's not easy to see the trend. Here, just by using a trend lines and some, I say, common sense, you can be looking to be trading aggressively initially. It sells off. You could be thinking, well, actually, once it comes off back here again, there may be other indicators that you're using at these points which actually help your trading. But the important thing is when you're looking here, you're still in a bearish. The market's gone bearish in terms of the trend line here. On the short term, it's just sold off so strongly that there wasn't a day there where we ended up positively, which in itself suggests momentum's to the downside. Eventually you get 3 or 4 days of consolidation. It tries to pitch in a bit more of a retracement, which it does. And again, you could, if you were looking at the shorter time frames, you may be, it may have rolled into, as I say, an indicator. If you were just looking at price, you could be drawing the trend line and selling into the price action there. If you've got it wrong, well, you're not going to be looking at big stops. And again, off it goes, and down a few days, pitched up, off again, so lower high coming in. And if you take this, then I'm going to just run this into a 4-hour picture. You can see this price action developing through here, and sometimes when you come down, you can see it in the bigger daily. It's struggling around on the dailies. At this point here, it seems a little bit clearer in terms of what's happening. It's pitching up. It may be in a bit of a butterfly price action going in there. Oh, did I confuse things with patterns? Let's ignore that. But you're starting to run here. It's pitching up, a lower high coming in here, selling off. Okay, has a little pitch up, down, lower highs, lower highs, lower highs, and so on. So it's become a little bit clearer when coming from that daily to the 4-hourly. And sometimes even back when it was just moved that candle all over the place. It was chopping all over the place. Move the candle. I didn't move the candle anywhere. I moved the trend line. And when it was chopping all over the place, it sometimes you'll come down to a lower time frame, and ironically it actually gives you a bit more guidance of what's going on. And for sure there's trades to be happening during these periods, because there's big enough movements in this, and almost clear enough. I mean, you can actually see the higher low here warning you of maybe as that's broken, that downward trend may be finished for a little while. You come back to the dailies, it's not so sure, but it pitches up a little bit further and sells off again. Indecision, it means that if it's not easy to read, it's not easy to read. You've got to leave it alone. This point here, it starts pitching up, pulls back, you immediately get a higher low coming in. It then takes that low out on that point there, chips about a bit, but then gives us another a new higher low compared to this one here. It's a higher low, it's confirmed quite easy, pulls up clearer, then a clearer higher low, pitching up. Okay, get the sell off at the end of the week, news based, whatever it may be. It happens. Just watch for the news in between, but just looking purely at the price action, even so, it's pulled this back. It didn't break that, so it's still effectively, even with that retracement, until it breaks it, it's bullish, and it's more of a bullish bias. It takes some bottle to be still looking at it in a bullish zone when it's pulled back towards that trend line. Through the weekend there, it's pitched up again, or I say through the weekend, it probably was the weekend, yep. Through the weekend it starts pitching up again, not quite confirming this is a higher low until it breaks it towards the end of the period there, right onto the 20th, so 4 days later effectively it confirms the higher low, and then eventually softens here. And again, when this market starts rolling over, the signs are on the 4-hourly time frame, it's weakening. So you can use the smaller time frame and read the price in exactly the same way. Lower highs coming through, you can be applying this trend line. Whoops, if I can apply it, you can apply the, oh goodness gracious, don't work with animals, children and charts. Here we go, pop that across there. Okay, so you're seeing this coming in now. You get the lower highs in from a day trading point of view. This is what we want to be seeing, this sort of confirmed sort of trend lines and things like this breaking down. As it's broken at the more conservative entry, maybe down here, it's confirmed this is a lower high from the previous highs here, and off it goes. And then again, lower high, lower high, lower high, lower lows. Get a bit bitty, a bit more of a more significant retrace, but it's trying to put higher lows in there. It's certainly trying, but never confirmed that one. It rolled over again, weak. And then price action comes off here, changes a bit here, higher low coming in on the 4-hourly, starting to push back up again. If you had trend lines going across here, you'll see that's probably into a bullish rhythm for a short while there. So again, just using the dailies, the 4-hourlies, you can come down onto the 60 minutes and read all these from the 60-minute charts. And as I said previously, I quite like 30-minute charts. But again, all this is shown in here. Some of it gives you opportunities to get counter trade, and you can counter trade when you see a bit more confirmation. Sometimes you're just going to be wrong in some of these events, but when it's happening, depending on what time it's happening and what's driving some of this price action, if you want to get into looking at other factors, you can do so. But again, all the time at the moment, lower highs coming through. Seen it again this morning. Lower high confirmed. A bit later there, it pitched up a little bit, gave another opportunity, lower high coming through, and so on. So there you go. It's sorry it's taken a little bit longer, but I just wanted to confirm those higher highs, lower lows sort of situations. I mean, I could pitch through these charts. I did this completely blind in terms of running, and I suggest you do it. Get a bit of an eye in. Do it where you can't see the price action. It's a lot better. It's just it makes it more realistic. Do it on a currency you don't normally trade, and see if you can identify where the trends are going, how it's changing. It will give you more confidence in your trades, particularly when you're short and the market's moving into a short and a downward trend. Then you're more confident to hold out for the targets. If you're unconfident, if you're not confident about what the price action's doing, be careful. But of course, always keep going back upwards. Keep an eye on what's happening bigger picture. So what we're seeing, let's go back to the current situation with this euro as I'm talking now. Hourly, it's showing downwards. Look at this multiple time analysis. Whoops, he goes, it's clicked on the wrong button. 4 hourlies, what's it telling me? Downward trend. Dailies, downward trend. Weeklies, if you can find it, there we go, downward trend. And look what it's just done. It's just broken the lows from back in August there. We're just breaking that sort of area. So again, it's confirming a lower high into this point here. Okay, so just really wanted to reintroduce the art of reading price. Have a great week. Bye for now.